Oh, right now, Baylor is very bullish. I would say it's been bullish for quite a few weeks. Essentially, it's looking at the patterns and seeing that although we are at all-time highs, the patterns indicate that there's a lot more to go from here. We run Baylor on a weekly basis and a cadence, so we can tell whether there's a risk and the prediction horizon is somewhere between 1 and 4 weeks into the future. But really, we run it on a weekly basis so we can get that signal and see whether in the next week, whether there's a risk of a drawdown. And we define a drawdown at least 5% or more in the market. So small fluctuations are not going to make Baylor go risk off, but if it's a large enough fluctuation, then it's a potential fluctuation, then it would mitigate risk and reduce that. But right now it's seeing that we are definitely in a bullish trend, likely to continue for at least 1 to 4 weeks as of this moment.
When you look at the trends of the various assets, we're seeing on the equity side strong trends in the international and emerging space, and commodities, really particularly gold. Treasuries are still seeing negative trends. And so when you add that all together, it seems like we're still in an environment where there's some concerns about economic growth, but inflation is still above target. And the underlying driver, a lot of this, I think, is a weakening dollar. And so right now we're seeing, again, a lot of the strongest trends in international, emerging, and physical gold.
From a macro perspective, if you look at all of the aggregate ratings for mid-cap and large-cap US, over the last month, we've seen hardly any change in the percentage of positive ratings. It's gone from 65% A and B rated to 68% A and B rated. Typically, when the threshold falls below 40% of A and B ratings, more than for a 2-week period, it could be the sign of a correction. We saw this in the months leading into 2022. We saw it early this March. So right now, things look stable. If things start to, in aggregate, fall below that 40% threshold, could be sign of a correction.
Adaptive has developed a system that's used for many years. It leverages a number of different technical indicators and it puts them together. The system will tell you whether it's more favorable for growth stocks or more favorable for value stocks. And right now it's pointing very strongly towards growth stocks.
As far as a current stance, we're fully long the market in all of our strategies. I don't think we've made a trade for 5 or 6 months. We've stayed pretty long the market. Like I said, we're looking for larger cycle changes, right? We're not going to be moving in and out of the market when it's moving 5, 6, 7%. We need to see some real slowdown in terms of the cycle in order for us to get risk off. I could change my mind next week, like a lot of people on this call. So as of right now, all signs continue to point towards a continuation of the rally. And I think we all got a little bit of help from the Fed yesterday that'll help us a little bit as we move on into the next handful of months with a little bit easier monetary policy.